All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. Hope everyone's having a phenomenal day. Making record highs here on the Nasdaq and the S&P. I mean, wow, right? So I want to talk about how you can approach a strong trending market, all right? Because the fact of the matter is everybody gets concerned. The market possibly can't go higher, right? And then we go into a mindset of, well, maybe this is the top and I should try to get short. Inversely, in a downward market, maybe this is the bottom. Maybe I should try to get long, right? And more often than not, this is what transpires, right? I've worked with traders now for many, many years. I've overcome my own personal hurdles as a trader and somebody who teaches folks and as a market analyst. The fact of the matter is, the market, more often than not, when it is trending, is exhibiting momentum, okay? And I relate it to rolling a ball. If you roll a ball, that ball is going to keep rolling, whether it's going downhill or uphill, until it finds resistance or support, all right? So as long as the mindset of those market participants do not see that the market is overpriced or underpriced, you have a better chance of partaking in a trending market to the upside, getting long, or a trending market to the downside, getting short, than you do trying to pick the session high or the session low, especially intraday. All right? This is something, it almost takes you from a mindset of trading to a mindset of gambling, and that becomes very dangerous very quickly. And let me explain that. When you're gambling, the odds are in the house's favor, not yours, right? So when you win, you have this rush of dopamine. You get very excited that you won, that you were right, that you beat the odds, all right? But when you're trading, it's very different. When you're trading and you approach the market from a consistent, disciplined position, employing an edge, meaning your own personal trade plan, you are actually the one that have the odds in your favor, because as long as you can employ that edge with a great deal of consistency and discipline, then you become the house, right? And that's the difference between gambling and trading. A lot of people don't understand that concept. So when you are in a strong trending market, there's a better than not chance the market's probably going to continue to go in the direction it was going, rather than you picking the high or the low of the day. All right, guys, I've done that. Right, I've done that. I've had very good luck picking highs and lows of the day. I've also suffered some of my larger losses trying to pick highs or lows of the day, and I've learned from that, right? As my career has gone on, I've learned from that, and now I don't pick highs and I don't pick lows, right? I wait for perhaps a high or a topping pattern to be established, and then I start to look to short the market, or inversely, I look to see a low or a bottoming pattern start to transpire before I then look to try to buy the market. You're better to be, and I've taught this for many years, you're better to be slightly late to the right party than being early or on time, in fact, to the wrong party. Okay, so whatever it is that requires confirmation for you, make sure that you are following that with a great deal of discipline. So let's talk about the Nasdaq here. I want to specifically talk about our Hawkeye wide bars. All right, we have a couple of them here, and I want in strong trending markets, especially, these wide bars for me play a vital role. So what we're looking at here is the Nasdaq 100 E-mini futures. All right, this is a 5-minute chart. That means each candle represents 5 minutes of price action, right, or commonly referred to as a 5-minute rotation. Applied to the chart is the Hawkeye volume, okay, Hawkeye paint bar, Hawkeye wide bar, Hawkeye pivots, and the Hawkeye radar dots. All right. So what I want to bring attention to in a strong trending market is I am looking specifically for these wide bars, these magenta colored bars that have these markings on top and on bottom. Why am I looking for these? Because if the market's going to potentially reverse, more often than not, it can transpire on or around a wide bar. So when I see a wide bar print in an upward trending market or downward trending market, we're just using this example, the first thing I do is I come in and I do what? I draw a line at its high and I draw a line at its low. Why? Because depending on what transpires next, more often than not tells me where the market's going to go. As you can see, we spent 2 candles within the high, and then we closed above. What did that wide bar just become? Became support, right? This candle right here closed. The low of that candle, roughly about 40 ticks. And from that candle, the market rallied over 720 ticks. Okay? So that candle that settled above the wide bar is the confirmation for me that there's a good chance the market's going to continue. Okay? Boom. You can see we had decreasing volume, neutral volume. The buyers stepped back in. The buyers increased. We continued to consolidate above the wide bar. Price continued onward. Okay? Super important to me to look at these wide bars in a trending market. It's important to me to look at them all the time. But in a trending market especially, because they are going to, more often than not, give me the insight to say this market's going to continue or this market's going to poop the bed. Okay? So let's do the same thing at the next wide bar. All right? I'll just copy and clone these lines here. We can reuse them. All right? So that right there is our high. Okay? Clone them again. Drop this down here to the low. And what happens? Well, 2 candles, right? This little candle here actually closes very slightly above it, right? But you get a little 2 candle consolidation. The high here is 156 and change. The close here is 159 and change. So this tiny little candle right here settled above the wide bar, right there. Okay? And just to go back to the first example, right there. This tiny little candle closed. It had a little low there. About 40 ticks again. All right, listen, for the Nasdaq, is what it is, right? We're talking about a big, highly volatile market. But notice that we never revisit this level. That wide bar is now support. And then we go on to run 430 plus ticks. All right, so this set us up obviously a little later than the first one did. That is what it is, right? We can't do much about that. That is what it is. But beautiful run here to the upside. And now let's do the same again, right? Let's examine the next wide bar. What does the next wide bar offer us? Okay? Nothing. Right? Nothing. At least not immediately. We'll come all the way over here to the close of the Globex session, the new open right there. Okay? So that wide bar, that high, marks the high for the session. Okay? We go into a consolidative state. And we don't close until we fall right here. And this is at, that's 3:50 in the afternoon as we are approaching the closing bell. Okay? And you can see now that the Globex market has reopened after 1800 Eastern Standard Time, which is New York Seaboard time. You can see we're in fact still respecting the low of this wide bar as what? resistance. Right? We've actually come back up to test it. And for the moment, it's still providing resistance. So the question I have for you is very simple. Are you employing Hawkeye tools? If you're not, I encourage you to. Very simplistic. You can see how clean it prints on my screen. We're looking at the volume specifically on the bottom, giving us a bias to who's in control, when, where, and why. All right. We're looking very specifically at the radar dots to see if there's any surges of high or ultra high or even exceptionally low volume, right? Because major things can transpire around those volume and frequencies. We're looking here at the pivots for when we're in consolidation. Look at the pivots here. I kind of overlooked this, but I want to revisit it because I think it's meaningful, right? These pivots here will help you realize that the market's what? In a consolidative state. Right? These Hawkeye pivots uniquely print. You can see when the pivots on the top and the bottom are fairly, sideways, and the price is in between them. Where are we? Right? We're in consolidation. We're congestion. Right? Or we're stuck. We're sideways. I don't care what terms you want to use. It all essentially means the same thing. But notice how when we left that consolidative state, look at the volume. This is super important, guys. Okay? Look at the volume. The volume is trending where? Up. Right? Consolidation. When you leave consolidation, you want trending higher buying volume. That to me is the onset to this entire move. Right? If you bought this out of consolidation, you actually got in on the low of that wide bar, and you had over 880 ticks. I mean, this is a massive move on the Nasdaq, right? I mean, I got to do the math. 888 times $5 a tick. That's $4,440 per contract. Now, before you rush me with comments, I recognize that nobody perfectly sells at the high. Okay, nobody exits at the high without getting lucky. All right, so let's just say you got pieces of that along the way, right? You did really well. In fact, this wide bar was loaded with what? Selling volume. What would that tell me if I'm long? Hey, Mr. and Mrs. Trader, we have exceptionally notable selling volume coming in the market. That tells me to run my stop nice and tight, okay? Start taking some more profit, or just exit my trade altogether. Because at that point, we're still up over 670 ticks, which is a massive run on the Nasdaq, guys. So, again, if you're not employing Hawkeye tools, I invite you to. I also invite you to access our Hawkeye Mastery Library, okay? Because I can't just give these to you, let them start printing on your screen, and you have no idea what to do with them, right? So I got to provide you with the education so that you know what's happening, when, where, and why, how to employ these tools into a trade plan around the thesis based on the analysis so that you can confidently take action utilizing them. All right? So I'm going to ask you to do me a favor. Go below this video. I'm going to put a link down there. I'd like you to click on it. I'd like you to consume the content. I'm going to also put the phone number to my Hawkeye concierge team. I'm going to put our email address down there as well. Feel free to reach out to my team. Feel free to reach out to myself. Okay? I take phone calls all the time. I set up Zoom meetings and demonstrations all the time. Okay? Let me help you move along in your trading career. Reach out, ask your questions, consume the content. Let's get you access to these indicators. Let's get you access to the Hawkeye Mastery Library. Okay? Our indicators work on TradeStation, TradingView, NinjaTrader, MetaTrader. Okay? You can trade stocks, futures, Forex, cryptocurrencies. All right? Obviously, all of those, most of them are optionable, and you can take that same analysis to the options market. All right, guys? You can day trade, swing trade, position trade. Analyzing volume and price action and the interaction between the two of them is consistent across all time frames. So there's no excuse. If volume and price action are not the absolute foundation of your trading approach, of your edge, of your trade plan, go below this video, click on the links, consume the content, send us your questions. Let us help you fine-tune your trading approach. Guys, for me, I tried everything. Right? If there was a dancing unicorn that went across the screen and farted rainbow colors and it told me to buy or sell, I bought it because I was hoping it was going to make life easy. Right? And then I came to the realization, if trading was easy, everybody would be successful at it. So I need to understand what the best traders in the world understand. The best traders in the world understand volume and price action. Hawkeye provides you with the tools to better understand volume and price action. Along with the tools, we will give you access to the Mastery Library as well. So click that link, consume the content, reach out to us, ask your questions, let us help you, and I will see you in the next video. I appreciate each and every one of you for your time today. God bless and have a wonderful day.